G'day folks, welcome back to Pete's Investing. It's April 5th, 2024. This is the market update for the SP500, the NASDAQ, the GermanDax and the Japanese Nikkei. And as you can see there, we're pretty much declined all across the board since our last video. If we go to our heat map, you can see there on the bottom left, we're still long on the monthly, although on the short we're all daily, and on the weekly, we've got a mixed bag there with some neutral positioning. The GermanDax still long on the weekly, and the Japanese is also short on the weekly as well as the daily. So is this the start of the great decline? Okay, so on the US market first off, in our last video we did have this diagonal ascending trend line drawn, and you can see there we've also got a key resistance that's currently showing up there. And I'll put that up there as well, and that's because of we're pretty much overbought, and we do have a bearish divergence on the CCI 150 versus higher highs on the price, and that CCI is still dropping off, so this could possibly be the start. Also, the ADX has been showing bullish movement across that period, with exception a couple of small exceptions, and we're currently also now in a bearish movement on the ADX as well. Our stochastic market forecast indicator up here is still in the overbought territory. No massive sign yet on the daily. But if I zoom in on the hourly, you can see there it's actually made a big decline, that stochastic market forecast. It's broken through the 90 level and approaching the 75. Again, if I zoom in, I do have a this dotted line, which is a 61% Fibonacci retracement. That's a result of this bearish divergence, lower highs on the CCI 150 versus higher highs on the price. And if I drew a Fibonacci between that range, which would have been the divergence target range hit, it hit it back here very early on. So I'll just draw a little target area there. So that's already been hit, but you can see there it's already broken through. It bounced off once off the 61% level there, then it broke through in the last few hours of trading, and it's currently now sitting around this area, and that area there happens to be that lower level Fibonacci range. So that's the current, it's broken below that 61%, and that's a bearish outlook. And if I move that down one more level to there, it's still not triggering that. Let's go down to there. So it's still potentially, we take it one step at a time. You can see there that now is approaching the 61% of that bigger Fibonacci range. So still a long way to go before we get too excited about seeing a crash, but at the very least we're seeing a retrace at the moment playing out according to these bearish divergence. On the GermanDax, zooming out on both timeframes, on the daily first off, it's still in the overbought territory on the stochastic market forecast. On the hourly, it's broken down through the 90 and approaching the 75 level, same as the S&P. But if I zoom in on the daily first off, you can see there it hasn't reached this diagonal trend line yet. We've also got a bearish divergence on the CCI 150. It's actually bouncing down from that resistance 18602 so far. Of course, it could also break to the upside. The ADX 25 is just a fresh breakout on the bearish side of it, so that's another bearish signal on the daily. On the hourly, if I zoom in again, we had a bearish divergence on the CCI 150 versus higher highs on the price, hit our target, and now it's currently resting off this other support area, and that would have been back to that low. You can see that's a 61% level, so it's bounced off that 61% level. If it breaks through there, we're going to see a lot more further declines, and then next level of support will be this diagonal trend line which we drew to these two trend lines, and this is the bottom one, which will be our next level of support. Next, looking at the Japanese market, the Nikkei. So again, on the daily, we're still in the overbought territory. No sign yet of a massive movement on the daily stochastic market forecast indicator. On the hourly, it's actually broken down and bouncing off or touching this 75 level. And if I zoom in on the daily chart first off, we did draw this diagonal ascending trend line. It's broken through that. Next level will be this minor support level at 38,300. And then we've got further declines down to this ascending trend line. But again, early days yet. The ADX is also showing a bearish signal. And we did have a bearish divergence here on the CCI versus higher highs on the price. On the hourly, if I zoom in, we had a few bearish divergence here. You can see there they both fell off. And now at the moment we did have a bullish divergence here versus lower lows on the price. That bounced. That would have hit our target between that Fibonacci range. And for those, just to show you, that would have been that little Fibonacci range. It went up as high as a 61% level, then bounced further to the downside. And again, so that's where we are. We're still declining on that, and it still looks like a bit of a free fall at the moment for the Japanese market. Lastly, we're looking at the NASDAQ. Again, on the stochastic market forecast, zooming out on the daily, still in the overbought territory. On the hourly, that's also touching the 75 level of the stochastic market forecast indicator. Zooming in on the daily first, we did have this bearish divergence on the CCO 150 versus higher highs on the price. That's starting to pull back after this, hitting this resistance at 18,465. Hasn't hit our target yet, but that's a potential decline. The next level, this minor support at 17,762. The ADX is showing a bearish signal on the daily, and on the hourly, if I zoom in, you can see there it's actually between that Fibonacci range, between that low and that high. I've drawn that dotted line. That's a 61% level, and it's actually broken through quite strongly after bouncing off it a couple of times previously. So the next level of support will be this 17,762 dotted line down here. So I'll keep an eye on that. But again, there is a bit of a bullish divergence at the moment. Let's draw that and mark it for future reference. So it's higher lows on the CCI versus lower lows on the price. Now for that to minimum target level, which will be retrace potential, let's go back to that recent high. So that'll be somewhere between that 38% level here. That's a minimum level of a retrace. So again, doesn't mean it's going to reverse 100%, but it could actually just go up to that level and then bounce back down again. This is a minimum retrace we expect it to hit. So at the moment, all markets are doing quite, actually weakening, although nothing really major yet to suggest a crash or any major correction. So far, just minor reversals. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.